Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Applied Digital CORP quarterly report. Applied Digital Corporation offers a range of businesses and services, including data center hosting business HPC, high-performance computing, hosting business infrastructure services for crypto mining customers, GPU computing solutions for AI, machine learning, and other HPC tasks designing, constructing, and managing data centers to support HPC applications. These services are provided through its Polaris Forge 1 campus in Ellendale, North Dakota, with an additional 150 MW of capacity available through a lease agreement with CoreWeave. The Applied Digital Corporation, APLD, stock price has skyrocketed by over 325% in the past year due to a combination of factors. Key drivers include significant lease agreements with CoreWeave, strategic financing and institutional backing, aggressive data center expansion, strong earnings reports, rising demand for AI and high-performance computing infrastructure, and positive market sentiment. The company's partnerships with major players like NVIDIA-backed CoreWeave have secured substantial revenue through long-term leases, while strategic funding has provided capital for expansion. Applied Digital's aggressive data center growth strategy is meeting the increasing demand for AI and HPC infrastructure, positioning it as a prime provider of critical services in this rapidly growing sector. The company's diversified exposure to both blockchain and AI markets provides resilience and growth potential, contributing to its strong financial performance. Analyst upgrades and positive market sentiment have also fueled the stock price increase, solidifying Applied Digital's position in the digital infrastructure sector. The primary drivers of revenue growth or decline can be identified through an analysis of key financial metrics. Revenue growth is driven by several factors, including proceeds from the issuance of common stock and preferred stock, tenant fit-out revenue, leases with CoreWeave, new data center projects, and increased net income from discontinued operations. On the other hand, revenue decline is attributed to a decrease in accounts receivable, an increase in accounts payable, the discontinuation of the cloud services business due to strategic shift, and a decrease in operating profit for the data center hosting business. These factors highlight the importance of managing cash flow, optimizing business operations, and making strategic decisions to drive revenue growth while minimizing decline. Net income and profit margins. A tale of 2 years. The financial summary reveals a mixed bag for net income and profit margins over 2 years. On one hand, the company's net income increased by 146% from a loss of $20.2 million to a gain of $9.3 million in 2025. This significant turnaround was largely due to the discontinued operations of the cloud services business, which contributed to the change in net income and profit margins. However, on the other hand, the company's operating margin decreased from 6% in 2024 to -6% in 2025. The data center hosting business saw a decline in profit margin from 0% to -34%, while the HPC hosting business showed an improvement in loss margin by 17%. The increase in operating income of $28.3 million in the cloud services business was primarily driven by higher revenue generated from tenant fit-out services. The contrasting trends highlight the complexities of the company's financial performance, with both positive and negative changes occurring simultaneously. The company is currently experiencing a negative trend in its operating cash flow. Despite an increase in net cash used in operating activities from $75.9 million to $82 million, the overall result remains a significant loss of -$82,023. This indicates that the company is not generating sufficient positive operating cash flow to sustain itself, suggesting financial difficulties and potential need for external funding or restructuring. The company's debt level and interest expenses have undergone significant changes. While total liabilities increased by $54,642, long-term debt decreased by $372,542. However, current portion of debt surged from $10,331 to $382,056. More notably, debt obligations skyrocketed from $7,867,000 to $867,020,000. Interest expenses have also seen a substantial increase. The net interest expense rose from $2,959 in 2024 to $3,946 in 2025, representing a 34% jump. Furthermore, the company's interest expenses increased significantly from $4,349,000 to $3,210,000. These changes indicate a substantial shift in the company's financial obligations and expenses. Management is optimistic about the company's outlook, citing significant growth in revenue and profit from the data center hosting business. They plan to allocate resources accordingly while maintaining sufficient liquidity for at least the next 12 months. The transition to profitability hinges on successful business operations, with a focus on investing in property and equipment, particularly in HPC hosting facilities, throughout fiscal year 2026. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In terms of dividends, the company paid out $1,576 in preferred dividends and $170,000 in common dividends in 2025, compared to $44 in preferred dividends and $44,000 in common dividends in 2024. Additionally, the company has also been actively buying back shares, issuing approximately 15.3 million new shares under a sales agreement in June 2025 for gross proceeds of $196.4 million, while also redeeming 225 shares in the same period. That concludes the financial summary for Applied Digital CORP. Feel free to comment below, and I will be happy to answer them when possible.